Again, good afternoon. It's Wednesday, October 26th, and this is Neil with the midweek market update for Simpler Futures. And we've just had Meta earnings report, and they went out on the end of day 129 and like 80 something cents, spiked up a little bit, but then sold off down to a new low for the move, and so the market didn't like that very much. And additionally, we need to keep in mind that we've got Apple and Amazon tomorrow, and that's of vital importance, obviously. We've had, well, it's going to be an amazing week. I mean, we've had Microsoft and Google. Today we got Meta, Facebook, and tomorrow Apple and Amazon. Pretty amazing. And if that weren't enough, then next week we've got a Fed, an FOMC Fed rate announcement, which is expected to come in at a uptick adjustment of 0.75 of a point, followed by a non-farm payroll report at the end of the week on Friday. Point here being, I'm going to tell you what I know, and I'm going to tell you what I don't know. What I do know is the S&P's reached up and made our bullish objective today. And what I don't know is, really what to look for exactly from here, because of the, it doesn't matter what anybody thinks really from here. What matters is what happens tomorrow with Apple and Amazon. And that's going to tell us, where we're headed next. And then, of course, next week, what I've told you to look for next week. And then that is when, in my opinion, we really move and learn. Now, specifically next week, I do not anticipate the Fed being nice and talking nicely. They've had a hawkish stance for quite some time now, and talked the market down a bit, but at 3,800 it's down 20%. The ES is, and we're above that 3,850. So it's not like it's not like the market's really coming off, and so it would be my opinion that you're going to continue to hear the more hawkish than dovish rhetoric next week, and we'll see. But that's what I'm looking for. So here's where we stand right now. All right, from the recent swing low of 3,500, you can see we've been keeping it with a series of higher lows, so we're one time framing higher. Today, we just reached up and tested a very important level. The high today was the volume point of control for this last little consolidation back here. The mid-70s target that I gave you was the market profile point of control. The high today was the volume point of control for that little pocket of trade right there. And it is a high for the week on a Wednesday. That does not close by I'm going to show you another picture here in a minute, but just by general appearance, you look at this and you see, well, that's kind of weak, right? Because that's a high for the move made on selling. It's a throw over top, a shooting star, people call it all kinds of different names, whatever, but the psychology behind it is that it's a high for a move, but it was made on selling because the sellers took over and kind of really took it lower into the close. So normally this is a bearish setup for a breach of low tomorrow, breach of today's low tomorrow, which triggers off a short and very much possibly starts the next leg lower. Normally that's the case. I'm very hesitant to put you into that trade in front of, I don't know how to do that, honestly, in front of Apple and Amazon tomorrow. I'll just tell you, you don't fare well going short into and in front of Apple and Amazon. It's tough. So what this would do tomorrow, if we indeed do breach today's low, is it will take this one time framing higher sequence that it's in right now, the daily chart is in right now, and it would put it into neutral. You don't know yet until we start with a series of lower highs that it then shifts and transforms over into the series of lower highs, one time framing lower. You don't know that. Initially, it just goes neutral. So a couple of things here, what it's done and what it has not done. What it did do was reach up and tested the 50-period moving average. What it did do was reach up and test the balance of this pocket of trade back here that I've been pointing to. What it did do was very normal in reaching an objective, is simply to take a rest, like you strive for such an objective, get there, take a rest. So you back off a little bit. And, the backing off of the highs today back to this 50 print, 3850, is really not that bearish, to be honest with you. So let me show you that and what that looks like, why I would say something like that. Let's go to a volume chart here. And you can see that we're right on balance. We're in value of this week. We're right in the middle of value of this week. We're right on balance of this week. Let me make the point. Yesterday at 12:30 in the midday, we were at 38.50 trade. This morning, to start things off, we were at 38.50 trade. It did reach up and make the bullish objective that I gave you. And it did back off, but it did not back off, back to reaching for something that would be, a lot more bearish looking. That would be that it would reach back into, closing prints like of last week. It'd be back at like 37.80, 37, things like this. So be careful with this. I really would. I'd be careful with that. I'd be careful, looking at this as like a shooting star type of a bearish formation for the ease of trigger breach of today's low as short and that trigger off a short. I don't know that I buy into that in front of the magnitude of the events that are ahead of us, and that is, again, Apple, Amazon, and the Fed and the payroll report next week. And so, with that, honestly, what I really think makes more sense, to be honest with you, is that we're right in the middle. I mean, you really are. You're right in the middle. 38.50, we're right in the middle. You're right on balance for the week. We're right. That's where it was yesterday midday. That's where it was this morning. So what I can see is that this thing can still reach a little bit higher. Not a lot. No, I'm not looking for a lot. This thing could still reach a little bit higher. Well, and lower too, by the way. But first, I wouldn't be surprised, honestly, in front of Apple and Amazon to see it reach a little higher and test like the lows of right back here. You see, that's going to be like a 16, something like that, like a 16 trade right there. Futures, ES futures, not SPX. You got to do the math for the SPX. I think it's like 11 lower or something, but this is a futures quote. And then trade the other side of this, which is to say trade like 37.50, right? And get tangled all up in here until we get through and at least into the Fed Wednesday next week, and we can see this thing really move. Now, my preference for that is, and has been, that we trade higher first and then it rolls and really comes off. We'll see about that part. That's just me, trying to, I need it actually, to be honest with you. This is working out. This is going my way. I need it actually a little higher to actually get filled in the with the bearish exposure that I wish to put on for the latter part of the year. But I'm trying to get filled on some butterflies that I've bid for pretty cheap. that needs a little higher trade. So this is going my way. I need, it doesn't matter what I need. I need a little bit higher. That doesn't matter. I need to read the chart for you. And I'm trying to talk through really what makes sense here to me, the way I'm seeing this, and offer the caution that I'm trying to give you as well. And mainly the caution is that we would look and see this as a bearish formation that we would be anxious to see trigger off and go ahead and fire short. I think that's likely going to be difficult in front of the information that we have ahead of us that we need to let the market see. And the market knows, it's waiting for this information that's incredibly important information that's still ahead of us to digest and then reprice from that new information. So there's, if you're waiting for such information, then there's really no incentive to reprice from here yet anyway, right? So look, here's what I got for you. We made the first objective that we had. It came so close to making the second, but it did not. The second one that I gave you, the 11s, but actually you can uptick those 11s into something like 16, put it on these lows right back here. Look at that as being your objective up on the top, and don't be surprised to see it come off and roll off of that back down, but not a lot, like 3780 or something down here, not a lot. Basically get all tangled up in the middle here until we get into next week, and then we get to learn what's what for a real move. So I was just saying, diddle in the middle, piddle away, the chips. So just be careful where we are right here, right now. So, but I'll be back at next update, and we'll pick up from there and see how things are going. Till then, good trading.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me